All right, good afternoon and welcome to the July Director's Cut. I'd like to start by thanking the team that helps put this together each month. I'll call out a few groups: our Information Technology Group, our PIO, our engineer, our executive coordinator, assistant director, our permitting team, and production team. This month, you'll be hearing from myself as well as Justin Kringstad, the executive director of the North Dakota Pipeline Authority. As part of my commitment to developing leadership within the Department of Mineral Resources, my part of the director's cut for the next 2 months will be done by two senior leaders within the DMR team. So August will be done by one, and September will be done by another leader. So we're looking forward to that. With that, we'll go ahead and dig into the numbers. This is the July director's cut, and it covers the month of May production. And as you can see, production is down a little bit. May production came in at 34,496,480 barrels, or 1.11 million barrels per day, while April was at 35,200,579 barrels, or at 1.17 million barrels per day. That is 1.16% above revenue forecast. So the revenue forecast for May, actually through the month of June, is at 1.1 million barrels, so still slightly over revenue forecast for May. It is down 5.16% from April to May, or about 60,000 barrels per day, April to May. You can see the portion of Bakken production broke out at 1.08 million barrels per day, or about 97.3% of the total state's production is Bakken Three Forks production. Gas production for the month is at 104 BCF, or 3.355 BCF per day. April came in at 104.1, or 3.471 BCF per day, down 3.3% April to May. I want to make note on the bottom that July 2025 through June 2026, the forecasted oil volume for the state will be reset to 1.15 million barrels per day. I'd like to point out and show you three main reasons for the production decrease. Number one, April completions were low. So May production was affected by those completions. Number two, there was a lower oil price environment in the month of April and May, and certain operators made the decision to curtail some production in certain areas of the state. And then you'll also note on the coming slides that there was a slight rig count decrease. This slide here shows the North Dakota production by county. You'll see that the top 5 counties haven't changed. Slightly different percentages. 31.5% of the production comes out of McKenzie County, and the top 5 counties make up 96.5% of the oil production in the state. Following slide is rig count by state and basin. On the top left, you'll see rig count by state. Upper right-hand corner, you'll see the U.S. rig count is at 544. June number was approximately 554, so there has been a decrease in the United States. 46.5% of those rigs are in the state of Texas. The current rig count in North Dakota is at 29, down 3 rigs from April, May, and June, where it was pretty consistent. So this drop was expected. We'd heard of efficiency gains through improved drilling times, so the number is down just a little bit. You can see in the lower left-hand corner, rig counts by basin. You'll see the Permian continues to lead with 263 rigs, 31 total rigs in the Williston Basin. So that includes two that are over on the Montana side. There's 263 rigs, as mentioned, in the Permian. That's both New Mexico and the Texas side, or about 48.5% of the U.S. rig count is there. And then the 35 rigs that are in the Marcellus and Utica dry gas play in the United States. Following slide covers rig counts over time by state. Total rig count in the United States is at 525. This is U.S. rig count, includes the land rigs only, not those offshore rigs. Again, North Dakota rig count at 29. U.S. rig count declined as expected over the past 3 months. Again, lower commodity prices really leading the way for that decision. The notable decline you can see in the middle is the line of Texas, the dashed blue line. And those rigs, Texas rig count went from 262 in June to 253 currently. Moving on to the following slide, this covers the basins. Again, 525 in the United States onshore. The Permian Basin in blue there declined as expected over the past few months, and the Permian Basin rig count went from 273 to 263 currently. So, notable decline in the Permian as well as goes along with the decline that we have here in North Dakota. Looking at pricing and activity levels, current WTI sits right around $65 to $68, depending upon what hour you look at that. Henry Hub gas price. Can you go to the prior slide, please? Henry Hub gas price sits right at $3.23. The North Dakota price, which has a revenue forecast of $70 for May, came in at $53.94, which is 23% low to revenue forecast of $70. I'll note that the revenue forecast for July 2025 through June of 2026 is also going to change to $59.50 per the budget that was approved by the legislature. You'll note on the lower left in purple, that's the rig count, and you can kind of see the gradual decline that we've had over the past several months, and I would attribute that to, again, what I've spoke about in the past, mergers and acquisitions, capital, and those companies gaining capital efficiencies through those mergers. We also had the administrative change, and of course, lower prices that went along with that. Frac crew is at 13 and continues to stay steady. I would just say that the slight decline in rig count doesn't necessarily mean that we have less lateral footage of rock being drilled. I believe operators are also gaining efficiencies through their 3-milers, and I'll show that in just a little bit. I'm going to pause just for a second while we get the slides back up. All right, go ahead, go to the next slide. All right, there we are. Taking a look at permits and completions, you can see that the wells permitted is the blue line on the graph. It sits at 97 for the month. The wells waiting on completion is at 330, and those wells completed for the month is at 65. I'd like to make note that of the 43 completions that are in April, you have the dip. I guess it's 2 dots to the left of the 65 where there's that dip in completions in April. And that's certainly one of the attributes that led to the decrease in May production. You can see the completion trend in the upper right-hand corner. June, we're at 65, May at 74, and again at April, we had that 43 number. So in theory, wells that were completed in the month of April would have full months of production in the month of May. And so with a lower completion count in April, that certainly impacts the production level for May. A little bit of an outline on the extended reach permits that we're seeing. There's 1,028 3-mile lateral permits that have been issued to date, 47 4-mile lateral permits, 3 of those which are completed. And then you have 15 U-shaped lateral permits and 2 J-shaped lateral permits to date. Taking a look at the well count, total number of producing wells is up slightly month over month, which is to be expected, but the red line, which is your inactive wells, jumped quite a bit. So that's the number of inactive wells that increased by 438 month over month, and it's likely that this is price related and that a significant portion of this is on the FBIR, and I'll go ahead and talk through that when I get to the FBIR slide. Looking at completed footage over time, there's nothing really new on this from last month. The only thing that updates here every month until the end of the year is the 2025 number. So with that, we can move on to the next slide. And this is a new graph that we added this month. It really highlights the longer lateral lengths over time, and you'll see the total percentage of 2-mile laterals is in blue. The total percentage of 3-mile laterals is the orange color, and then the green color is the 4-mile laterals. And I guess you can take a look at that and kind of see right around 2020, 2021, we started to, the industry here in North Dakota started to drill laterals. And percentage of that currently is stands right around 30. 30% of wells drilled in the state are 3-mile laterals, 70% are 2-mile laterals. 4-mile lateral development is relatively new. It began in 2024, so it's in its infancy, and we continue to see an increase in the number of 4-mile permits. The way that we categorized the lateral lengths for this particular graph is in the lower right-hand corner, and you can take a look at that. Moving on to FBIR activity, you'll notice that May oil production is at 149,229 barrels, or an 18.9% decrease. So a decrease of about 35,000 barrels of oil per day. April's production was at 184,026, and they currently have one drilling rig drilling on the FBIR. This decrease is due to operators choosing to curtail production in the lower price environment in April and May. And I would expect that to continue in this area for the next month as well. It's my understanding that the operators that are curtailing production are actually starting to turn those wells back online in this slightly better price environment. But that is the reason for the decrease in production from April to May on FBIR. Taking a look at gas capture, another really good month. Gas flared volume from April to May decreased 6.09 million per day to 142 million. And the statewide gas capture is still strong at 95.7, with the Bakken gas capture being at 96.1. So with that concludes my report. I'll go ahead and turn it over to Justin Kringstad and let him give his report, and we'll be back for Q&A when Justin finishes his portion. Thank you.
All right. Well, good afternoon, everyone. Justin Kringstad, Director of the North Dakota Pipeline Authority. We'll get right into some of our neighboring states sharing the Williston Basin with us on the oil production. Montana up slightly April to May. We're still waiting on the May numbers for South Dakota, but I'm not expecting any major changes there. Just so you have a sense of what's happening within the region and within the transportation supply sector. When we look at the month-over-month changes, a couple things to point out on this. Obviously, pretty strong changes month over month relative to what we've seen in the past, both for oil and natural gas. I will note as well that bottom portion, that gas oil ratio, this is a record level for GUR, now over 3 for the month of May. So it's the first time we've been over the number of 3 MCF per barrel of oil. So that was a significant milestone. Again, we'll see some ebbs and flows as this continues to evolve, but that trend is continued to move upwards. A couple slight tweaks on what's been happening with our crude oil movements out of the region. Slightly softer pipeline movements in the month of May relative to April. Slightly stronger rail movements in the month of May relative to April. Nothing substantial, but just some 40,000 barrels here and there shifting around the marketplace. We look at rail solidly right around that 140,000 barrels per day in May is my best estimate for the month. Destinations for that continues to be dominated by the Pacific Northwest. Again, those refineries having that appetite for that light sweet barrel. The Bakken are going to continue to fill that need for the foreseeable future. So I don't expect these market shares to ebb and flow substantially from where they're at, unless we really start to see some dynamics changing on that East Coast and their supply sourcing. what prices are doing around the nation relative to what the refiners are paying. Nothing substantial, no major changes from that March to April. April is the latest data available from the EIA. And so we'll continue to watch that. I don't know if we're still live or not.
I think we're still alive.
We're still live. Perfect. We're just gonna, there we go. Perfect. So with that, we'll bop to my slide 9, the next slide there, just a snapshot from where prices were earlier today. The Brent WTI spread softening just over $2 per barrel. Houston WTI pricing a little bit weaker than it was last month, 57 cents as of the latest data available. And then no changes at Clearbrook, which is still trading at a premium to WTI, which is encouraging for North Dakota. You'll see here in a moment as we talk about some of the oil price, what we're seeing at the wellhead. I was hoping for some better pricing in May. Signals and market indicators I watch suggest that maybe we'll see some improvements here from what we're looking at on this slide of $6.98. That was the May discount to WTI. Slightly better than April, but not as much as, again, I had hoped. I'm hopeful that some of the market signals are telling the right story, that we'll see some slight improvements in this discount as we move into the June and July numbers. Why, again, this is important. When you think about the North Dakota budget, when you think about the royalty owners, when you think about the producers, this is a direct reduction in their oil price at the wellhead. And so the royalty owners get paid on that. The state of North Dakota is paid on that, as well as the operators themselves. And so in an ideal scenario, you want that discount as minimized as possible for the best pricing for all those parties that share in that same goal of maximizing the value at the wellhead. On the next slide there, 29, we'll take a look. Imports, exports slightly continue to trend downwards on the imports coming through North Dakota's ports. Again, this is truck and rail traffic coming in through North Dakota from Canada. No major changes in the exports from North Dakota going north. Again, encouraging news, as you heard from Nathan, on the gas capture front, 96% capture, 4% flaring, no changes month over month on the reason for that. And again, this is 3 months in a row. This is great news that we're seeing from the industry here. Very encouraging to see gas capture percentages where they are, see the volumes as low as they are. Again, when we're seeing near record levels of natural gas production, record levels of GOR in the basin, to see that, again, strict adherence to some of the corporate objectives that they have, very encouraging. We're seeing the midstream portion of that supply chain keeping pace. We're seeing gas captured, or new wells getting connected to gas capturing systems on pace with new wells coming online. So this is, again, one of those metrics that's one of the first early indicators that there's a problem, and we're not seeing any of that right now. The EIA got a little more pessimistic with their July oil price outlook, as well as some of their supply and demand. So that top left piece of this, they shaved another $1 off of their oil prices late into 2026. So their latest forecast suggests a $53 oil price exiting 2026. Again, these are going to move up and down with the marketplace and where it's at, but that's their latest outlook. And what's driving that is that lower right-hand graphic, where you see both production and world consumption forecasted to continue upwards, but that production level in blue continue to outpace their outlook for world consumption. So some tougher pricing outlooks that, again, the industry has to take all the different forecasts and their own outlooks and make those decisions here going forward. No major changes at all to announce on the gas capture front as it relates to gas processing. So again, no changes here to discuss today. Then moving into the natural gas transmission side, we'll start with the Northern Border Pipeline. Again, just as an update, somewhere around that 80 to 85% market share coming from North Dakota, with that decreasing trend of Canadian volumes coming through the Port of Morgan on that system as it feeds into the Midwest pipeline and consumption and marketplace. What is noteworthy is that over the last month, we've seen some more ethane getting rejected into Northern Border. So we've seen the BTU numbers start to rise again. Again, these are market decisions based upon the participants of what they're going to do, if they're going to capture that ethane and send it out of North Dakota, either on a dedicated ethane pipeline or on a Y-grade mix, or if they're going to reject that ethane into the natural gas stream. And why that's important when we think about the capacity concerns we have in North Dakota, the more ethane that gets rejected into the natural gas pipeline network, that is filling up space. And so as we get more and more constrained over the next 1 to 3, 5 years down the road here, it's going to be important. Every last molecule and where that molecule can move is going to be important in our ability to provide natural gas solutions for North Dakota. So we'll keep an eye on this. Again, nothing concerning today, but as these trends continue to move, it will be important as we get tighter and tighter market conditions here in the state. And last month, we talked about the request for information that went out by the Industrial Commission and the Pipeline Authority in May. We received those back at the end of June. Two responses, one from WBI Energy, one from Intensity Infrastructure Partners. On the next slide there, 20 or 40 would be. Yep, so two responses back. The individual Industrial Commission offices are reviewing those RFIs as well as myself. And next time that they will be discussed is at that July 30th meeting next week for the Industrial Commission. No news to report today on that open season WBI held regarding their expansion of storage within the basin. And no news as well on the NGL side to discuss here today. So with that, I will wrap up my formal portion and Nathan come back up and we'll answer any additional questions.
Any question?
This one's been bugging me. I wanted to ask this for a while. Is the Bakken, or is it shale plays where you have that gas oil ratio the way it is? Is that unique to the Bakken or is that unique to shale?
It is not. So I'll quickly answer what I can. So the rising gas oil ratio, it's a well-known phenomenon in reservoir engineering. The Permian is experiencing it as well as they're continuing to age. It just has to do with the pressure depletion down in the reservoir. But no, the Bakken is not unique in that. We do see that in other plays.
Yeah, I would agree with Justin. I think the Eagle Ford is a perfect example of a basin that's seen rising GORs over time. Permian, other major shale plays do the same thing. It's a function of the reservoir in the tight shales. So,
what's the impact of that price discount on activity levels? What's that usually look like, and like what sort of do you expect going forward? Why is that happening?
that's a differential.
Yeah,
It's differential.
Yeah.
Yeah. So why it's important, again, if you can put yourself in those various camps that again, the royalty owner, the producer, or the state of North Dakota, if you put yourself in the producer's shoes, they want to maximize their value for their investment. And so if you have a producer who has a portfolio of assets around the nation, around the globe, you're going to try and allocate capital where you're going to get that best return. And so when you're drilling in West Texas and it has a certain pricing environment and you come up to North Dakota and we're seeing a significant discount at times to other major benchmarks, that's going to impact some of those decisions of where they're going to allocate that capital. So it's important in attracting capital. You want to have the best priced market you can. If you're that royalty owner, again, you want to maximize the value of your asset. And the state of North Dakota is in that same, that the tax revenue is based upon the wellhead pricing, not on some other benchmark around the U.S. So that's why it's important, where we see it going long term. That's always a big forecasting question that OMB has to deal with and others at the legislative side. And so when we advise that, obviously we're looking at history, what's been taking place. We're looking at any major expected market changes with dynamics with Canadian oil, Canadian markets, Midwest refining, all of that's going to tie into that pricing situation.
Is it like infrastructure related? Is that why the discount's there or? is it-
It's, yeah. So the question, I don't know if everybody can hear that online, but it was, is it infrastructure in a perfect scenario, in a perfect, I don't want to say perfect maybe, but a market scenario, yes. North Dakota, we have a certain distance that we exist from those, West Texas intermediate pricing points at Cushing. So there is going to be a transportation component to that. However, because of the grade of the Bakken crude, that light sweet, there are some refiners that are willing to pay a premium to WTI, and that's what we're seeing at Clearbrook. So the market moves and shifts as, refineries appetites or supply and demand changes at those refining complexes. So all that is a continual ebb and flow in the marketplace.
Has there been a lot of appetite for those drilling waivers that were announced, I think, a month or two ago?
The question was, has there been an appetite for the drilling waivers that were announced a month or two ago? And to my knowledge, we haven't seen any of that. We haven't seen any requests for that yet. Mark's here and he's shaking his head no. So we haven't seen that. In fact, any activity at all yet.
Do you think there's going to be a long-term effect from this like period of low prices, or do you think now that they're kind of in the higher 60s, it's going to kind of go back to normal soon?
But we're hearing steady, and I would say the activity level, the drilling rigs and the frac crew count is impacted by operational efficiencies that operators are gaining by drilling 3 and 4 mile laterals on the graphs that we showed. So as far as increasing activity level, I don't think $65 oil is an environment where operators are going to increase. We're also impacted in the industry by the mergers and acquisitions that are going on. There's one recently that legally closed, and that's the Hess acquisition by Chevron. And that's yet to be determined about whether that impacts activity levels for those Hess rigs that were operating in the state of North Dakota. But over the last 2 years, I would say that mergers and acquisitions have created a need for capital efficiencies across the industry, and most certainly that impacts North Dakota. It ties right into the differential question that you asked. Those companies that are now merging and acquiring companies here in North Dakota are often large multinational companies that have assets all over the United States and in the world. And they have options on where to choose to put their capital investment. And we're certainly hopeful that they choose North Dakota, but also understanding that there's the allocation of capital within those companies. So it's a long-winded answer to your question, but yeah.
What do you think? Is there any comment on the recent tax cuts and spending bill out of DC, how that might impact activity in North Dakota? Any idea?
No, I don't have any comments on that right now. We're just starting to dig into that. The DMR will be paying close attention to the rulemaking that'll be coming through the BLM and the EPA. Have staff that's kind of dedicated to following that and making sure that if there's changes to that, we'll have a voice or get our opinions out there on that. But I don't really have any other comments on it right now. I think generally speaking, the majority of it is for positive for oil and gas industry. And so beyond that, I no comments on anything to add.
Since you mentioned Hess as part of a merger, is the Hess name disappearing from North Dakota?
No, I anticipated that question would come up, and for the near term, I would say no. It's generally what's generally done is that those companies operate as a wholly owned subsidiary of, in this case, would be Chevron. Now, I don't also understand the legal framework that they acquired the company under, but I know that that's been done in the past. So I would say for the near term that it'll be ran as a wholly owned subsidiary of Chevron. So, and they've legally closed, from what I understand. And then what occurs is what's called an operational close. So between legal close and probably a couple months from now, there'll be a transition period from Hess operating to Chevron operating practices and procedures. So that's my understanding of the current situation there.
What's behind the low completion numbers from April? Is it just the low price or is it something else?
I believe we had weather. I don't know if Mark, do you have anything else? Was there weather or other impacts that we had? We had, the number was 47. So typically we had like between 65 and 80 prior to that. And then of course we're back up to 65, but I believe April was low. We had some weather events, and road restrictions are another one that's probably more likely. But it certainly impacted maize production, along with again low oil price and operators deciding to curtail or throttle back some of their production during that month or two. It appears like that was a couple month phenomenon that we're seeing, and hopeful that wells are coming back online after that, because you know, the red, I can't remember what graph number it was, but the red line, the inactive well shot up by 438. That's a certain indicator that occurred.
Can they do that automatically, like, or is it just
So you know, those are typically done. There is generally a financial and an economic decision, but the lease prevails in that. So a lease is a private contract between the operator and the lessor. And I wouldn't be able to comment on each and every lease in the state, but the lease will generally specify whether that can or can't be done. And if they can do it and have the ability, they may. And it appears that generally only happens in lower oil price environments, because there is a certain portion of fixed costs that even if you shut the well in and oil isn't produced, you still have to maintain the location of the lease and several other costs. So there's those fixed costs that still need to be paid for, and then there's variable costs which come in once oil and gas is being produced. So.
Last question on the all these inactive wells that like sort of just are like a sort of flat number, not exactly, it goes up and down, but are those mostly like non-Bakken wells, or what are they? Where are they?
Oh boy, I don't have a good answer for you on that. This month, or the month that for April, it certainly appears that they were heavily Bakken related. So, and the reason I say that is, you know, 1.1 million barrels of the oil that's produced in the state is Bakken. And so it leaves like whatever the number was, 30 or 40,000 barrels that's non-Bakken. So you can't get a 60,000 barrel decrease for the month without having significant amount of Bakken production that was curtailed or throttled back for the month. So that's probably the best answer for that. Certainly there was Bakken production that was curtailed during that month.
Would it be a fair statement to say that there's not a lot of interest yet in non-Bakken drilling?
You know, we've through the hearing and order process here at the DMR, we've seen some interest in that. My history here hasn't been long enough to understand if that's an increase or it's been pretty normal. But we've seen some spacing unit hearings come through that are non-Bakken related. I'm not sure if it's an increase. It's probably pretty normal activity. I'm looking at some of the team over here. They're nodding their heads that it's kind of been status quo. Okay. So not a lot of interest yet.
Okay. And Justin, is there another deadline coming up with the natural gas pipelines?
There is not, no specific deadline. And I know it will be on the agenda for discussion and more information at that July 30th meeting.
Any questions online?
We have quite a few online questions.
Here we go.
Is there increased fire risk to any higher output counties as we enter the drier months?
So every day, I guess I'll answer that quickly. Right now, the fire risk in the state is very low. We've had a significant amount of rain. And I guess I'm assuming the question may be coming from out of the state. We've had a lot of rain in the state, and every day we monitor a fire risk. I get a fire risk map email, and for the last several weeks, it's been almost none or very, very low fire risk. And that's a positive, because here we are in kind of this late July timeframe, And I think that the moisture that we received, I think we probably had 1.5 inches today alone will continue to carry through those drier months. So I think, although I can't be certain, I would say that this year fire risk should remain low for the majority of the year. But that's a good question.
Do you see rig activity potentially changing in Q4 and going into 2026?
Do I see rig activity changing in Q4 and going into 2026? I really don't. The rig drops that we had heard about or expected to see, I believe we saw this month. If anything, it'll be a rig or two up or down. I don't see a significant increase or decrease as long as oil stays in this at this number. A couple operators had planned rig releases due to being just drilling faster, so they're burning through their capital a little quicker, and so they had those planned rig decreases for capital efficiency reasons. So I guess the answer is really no. I don't see much of a change in rig count over the coming months.
This has probably been answered, but are operators turning production back on now after the drop in April? If so, do you expect production to rise in June, July?
So this was for May production. I would expect that June production is going to be in a similar place. Again, I don't want to speak early because that's still a month away. But I would expect the production the month after that to be on the increase, as I've heard that operators are beginning to turn those wells back online or pull off the curtailments that they've put on the wells. So
You said rig count is 29 right now. When was it that low last?
I don't have a good answer for that. I would have to defer to the team, but we don't have that number right in front of us right now. So Ray, we can get that if you make note of that question.
I might just add it ebbs and flows obviously daily and multiple times throughout the day. So I think even when I checked moments before this, it was back up above 30. So yeah.
You said July 2025 through June 2026 forecast volumes reset to 1.15 million barrels per day. What figure has this been revised from?
The current forecasted volume, which was budgeted in the I guess the 68th legislative session, was for 1.1 million barrels per day. So it's been revised from that 1.1 million number to 1.15 based on production history over the last 12 to 24 months. And then the second year of the biennium, which would be the I guess July 2026 through the end of June 2027, that number goes back down to 1.1 million barrels per day. So 1.15 for the first year, 1.1 for the second year of this biennium.
Are tariffs that are set to start next month becoming a major worry for North Dakota drillers?
Justin may have more to say on this, but I don't have a whole lot. I've not heard a whole lot of concern over the tariffs to date. We've met with some of the largest operators in the state over the last month, so I would certainly think that had that been a major concern for them, that they would have said something. And every time I meet with an operator, I ask about activity levels, and had those been a major concern, I would imagine that their activity levels would show the same. And to date, I haven't heard that, so I don't believe so. Not that I've heard to date. Anything to add on that?
No, nothing to add.
What kinds of changes in the Bakken production and transportation infrastructure to respond to the expected spike in gas demand for power generation driven by AI and the rapid growth of data centers nationally?
Yeah, so I'll address that. So the two key projects that I mentioned earlier, driven by largely a demand pull throughout Western, Central, and as well Eastern North Dakota. So we are definitely engaged. The pipeline industry in North Dakota is engaged on watching these opportunities, and a couple of projects now on the table looking to address just that up here in the state.
Those are all the online questions.
Anything else? All right, with that, thank you for joining the July Director's Cut, and we'll go ahead and break. See you next month.
Thank you.
Thank you.